The global financial markets are on high alert, witnessing a potential seismic shift as Japan initiates a reduction in its substantial holdings of United States Treasury bonds. This strategic move has triggered a cascade of concerns in Washington, coming at a time of heightened trade tensions, particularly those surrounding the rapidly evolving electric vehicle sector and newly imposed US tariffs on the Japanese automotive industry. Japan, a long-standing and significant investor in US Treasury bonds, has signaled a clear departure from its established financial role. This decision, widely interpreted by market analysts as a calculated recalibration of its economic strategy, has prompted a strong and immediate reaction from the US Treasury Secretary, who emphasized the paramount importance of maintaining trust and cooperation between allied nations. The historical context of this pivotal maneuver lies in Japan's enduring position as a major foreign financier of US public debt. However, recent policies of consistent foreign exchange interventions aimed at safeguarding the competitive edge of the Japanese yen in global markets have drawn increased scrutiny from international observers. The imposition of high tariffs on electric vehicles, coupled with vocal US criticism of what they perceive as unfair competitive practices, has likely spurred Tokyo to adopt a more assertive and strategically independent approach. The message emanating from Japan is unambiguous and carries significant weight. Should the United States persist with its protectionist measures, particularly in the electric vehicle sector, they will reconsider their substantial holdings of US bonds, potentially triggering a significant market adjustment. Washington, unsurprisingly, is far from pleased with this development. Japan's potential to undermine the prestige and stability of the dollar as the world's reserve currency is a significant concern. The electric vehicle sector, a central point of contention in this evolving economic drama, underscores the strategic importance of this technology on a global scale. Japan, a recognized leader in hybrid and fully electric vehicle technology, feels increasingly targeted by US protective tariffs, which they view as unfairly impeding their access to the crucial US market. This perception has led them to question their continued financial support of the US economy. The Japanese finance minister has issued a clear and unequivocal warning, stating that should economic interests be compromised by unilateral sanctions or protectionist measures, alternative financial and economic instruments will be deployed. Economists are actively debating the potential risks and benefits for both nations involved in this high-stakes economic confrontation. A large-scale, rapid bond sale could trigger significant market volatility, potentially destabilizing global financial markets, and unexpectedly strengthen the Japanese yen, impacting its export competitiveness. Conversely, the United States, under its current trade policies, remains determined to safeguard its domestic producers and bolster its own nascent electric vehicle industry. The core of this escalating dispute lies in Japan's growing frustration with US protectionism, particularly in the strategically vital electric vehicle market. Japan's potential bond sales, even a partial reduction in their holdings, could have far-reaching implications for the dollar's status as the global reserve currency, potentially triggering a broader reassessment of the global financial architecture. The governor of the Bank of Japan has hinted at the potential use of financial leverage as a strategic tool in ongoing trade disputes, adding another layer of complexity to the unfolding situation. Major Asian economic players, including China and South Korea, are closely monitoring this unfolding situation, assessing the potential implications for their own economic and strategic interests. Some commentators speculate that this could potentially lead to the formation of a new economic alliance or bloc in Asia, challenging the established global order. While the United States seeks to preserve its strategic alliance with Japan, domestic political pressures and the influence of powerful business lobbies make it increasingly difficult to concede ground or compromise on key policy objectives. The depreciation of the yen against the dollar, driven by Japan's low interest rate policies and persistent foreign exchange interventions, has exacerbated inflationary pressures within the Japanese economy. Rising U.S. interest rates have also significantly influenced Japan's foreign investment strategies, diminishing the returns on their substantial holdings of U.S. bonds and prompting a reassessment of their portfolio. Beyond the immediate economic dimensions, the geopolitical implications of this dispute are substantial and far-reaching. Trade disputes, particularly those involving such significant economic powers, could strain the long-standing US-Japan security alliance, potentially impacting regional stability. While Washington emphasizes the importance of dialogue and diplomatic solutions, Japan's strategic bond sales pose a potential threat to the stability of the dollar and the overall health of the U.S. economy. The electric vehicle trade conflict continues to escalate, highlighting the growing strategic importance of this sector in the global economy. Japan, a recognized leader in electric vehicle innovation and technology, challenges U.S. protectionism, arguing that it creates an uneven playing field and stifles innovation. The bond issue underscores the complex and increasingly intertwined interdependence between these two economic giants, highlighting the potential for economic disputes to spill over into other areas of the relationship. Experts are now focused on the potential scale and timing of Japan's bond sales, as well as the corresponding U.S. response. A small initial sale suggests a possible larger move if tariffs are not eased, signaling a potential escalation of the economic conflict. Some analysts warn that a rapid and aggressive bond sale could negatively impact Japan's export-oriented economy, potentially triggering a domestic economic downturn. Global observers see this as a potential turning point. The actions of other major economies reducing dollar reliance and the EV sector's centrality amplify this. The question remains, is this a financial strategy or a negotiation tactic? What consequences await the global economy? This is not a conclusion, but a turning point. The tensions between Japan and the United States highlight the shifting dynamics of the global economy. As we move forward, we'll continue to track these developments and analyze their impact on the world stage. If you found this analysis insightful, please like, share, and subscribe for more in-depth coverage of global economic trends.